Okay, so what we're going to be covering in this section is price action and Japanese candlesticks. Okay, now this is an extremely important section and element to the course, probably the most important part of technical analysis. Okay, what this section is going to teach you is actually how to read price action, understand the different kinds of Japanese candlesticks and patterns that occur, and therefore how to actually implement that into our trading to give us more synchronization on our charts and more reasons why we should buy or why we should sell a specific currency or asset. Okay, now make sure that you make notes in this section. Very, very important. You will probably need to get to the end of this section and probably listen to it all again. Okay, just make sure that it is completely understood, and you just made a lot of notes on this section because it is very, very important. If you can't read price action, you can't understand Japanese candlesticks, you won't get very far when it comes to actually reading these charts and making trades on these markets. Okay, so this is a key element to the course. Now, first of all, why do markets move up and down? Okay, so it's because of two things. It's because of fear and because of greed. Okay, if people are greedy, they buy, and therefore the price will rise. Okay, and if people are fearful or scared, they will sell, and therefore the price falls. Okay, so we use Japanese candlesticks because they show us the price, okay, and they also display the price action in a very easy to read format. Okay, once you understand the format, okay, it's very, very simple to understand what's going on behind these candles and actually what's happening in terms of the buyers and in terms of the sellers on this market. Okay, so essentially what they are just compiled data reflecting the movement in a market over a certain period of time. Now, throughout this course, we've already, I'm sure we've probably mentioned timeframes quite a lot. Hopefully you have an understanding of that. If not, I will just explain it to you now. Now, when we're looking at a chart, now in terms of the way that we analyze these markets is we need to make sure that we're looking at multiple different time frames. Now, what I mean by that is the fact that if I click on a monthly chart or a weekly chart or a daily chart, what does it actually mean? So when we put the Japanese candlesticks on our charts, okay, that displays the price action and displays the actual price of that market, if we have a monthly time frame, what that means is each candle is 1 month's worth of data. Okay, so there's 22, roughly 22, 23 trading days in a month. Okay, so that one candle, okay, that one candle is compiled of all of the buys and sells and the open and the close of that specific market for an entire month. Okay, so all of that data for 1 month is in one candle. Okay, then if we look at a weekly chart, as you can guess, one candle is an entire week's worth of data. So for example, if we're looking at foreign exchange, we've got 5 days a week. Therefore, one candle is showing you 5 days worth of data, 5 days worth of buys and sells. Okay, and so on and so forth. When you look at the daily, we've got one candle is 1 day. When we look at the 4-hourly time frame, one candle is 4 hours. When we look at the hourly time frame, we've got one candle being 1 hour. Okay, and when we look at it, if we're looking at a 1 minute candle, which I certainly don't recommend, one candle is 1 minute. So hopefully you understand that. So if we refer in the course and we say when we look on the weekly time frame, we can see this. It means that on that weekly time frame, we're looking at where the candlesticks are actually a week's worth of data. So each candle is 1 week's worth of data. Okay. Very important to just get the hang of that in the time frames, because if we're looking on, let's say, the hourly chart, okay, the hourly time frame, we have a potential bullish movement occurring, we would look on that, we would do our analysis, we'd say, right, we're bullish, we want to go long, but then we might look on the 4-hourly or the daily candle, we might actually think that, well, actually, when you look at this market, the market looks bearish. So you don't want to be necessarily going against that larger time frame trend as such. So it's just very, very important to be aware of the time frames that we use and how to use them, and just to make sure that you're not going against your own analysis. If you're looking at a monthly chart and a monthly time frame, and you're very bullish on the market, but then you jump into the daily candles and you're quite bearish on the market, you just have to be aware of what's going on all time frames. Okay, so just make sure that you understand that part. Now, the candlesticks themselves, what do they actually show? So we've got two images on the right hand side. One is a green candle and one is a red candle. So starting very, very simply, the green indicates bulls, okay, buyers, okay, and the red indicates bears, okay, sellers. Now, where we look on this on the Japanese candlesticks is it shows us so much information in just such a small area, okay? It shows us the open price, it shows us the close price, okay? It shows us the highest price that we traded during that candle, and it shows us the lowest price that we traded during that candle. It shows us very quickly and easily whether that candle was bullish or whether it was bearish, okay? And it also shows you how strong that bias was, okay? So I'm just going to talk through it from the bottom left. So obviously the green candle, the body of the candle, which is the big green rectangle, okay, is the actual price movement in a day from open to close, okay? So let's say the market, we talked about timings earlier, but let's say at the beginning of the UK session, okay, we opened at this price here, so let's say that was at 7,000, okay, and we closed the session at 7,100, okay, so that's where your candlestick will be located on the chart, okay, so the open price will be where you open the day, and the close price will be where you close on the day, okay? And that movement inside is indicated by the body of that candle, that big green candle, okay? The bigger that green candle is, obviously the more bulls, the more buyers, and the stronger that bias, because there is a lot of buyers in that market, okay? Now the other thing to be aware of are the wicks and the tails, okay? And these are basically the spikes, I like to call them. The tails will be on the bottom, the wicks will be on the top, okay? And when we're looking at these, all it's showing us is actually how low that price traded. So in the example of the FTSE market, if we opened at 7,100, potentially that lowest price that we traded could have been 7,050. Okay, so the market had gone all the way down to 7,050, but actually has come all the way back up, okay, and perhaps it's gone to 7,150, okay, the highest price traded, which will be the very, very top. But where did it close? In the end, it closed at 7,100, okay? So you just have to be aware of what these images and what these candles actually mean, and vice versa. Obviously we're looking at the green one. If we look at the red one, it's exactly the same but just the other way around, okay? The open price is going to be the top part, okay, and the close price is going to be that bottom part. So where that body opens and closes is going to be the other way around on a bearish candle, okay? And again, the highest price traded, you've got the lowest price traded, and you can see the movement of the candle. Okay, so don't worry, I will go into this in more detail as we move along, but hopefully you can just understand the actual elements and parts of that candle, the open, most importantly, the close, okay, and the highest price we got to during the day and the lowest price we got to during the day, okay, and obviously if that's a daily candle, yes, the lowest and highest price we got in a day. It might be an hourly candle, so it might be the lowest price we got to in that hour and the highest price we got to in that hour, okay, and the open price of where we started the hour, where we finished the hour, okay? And this is how time frames come into it as well, okay? So, as I said, in terms of the time frames, when you're looking at a monthly candle, you're going to see here you actually have the open of the month and the close of the month, as well as the highs and the lows. And obviously the entire candle itself is the actual range that the market moved during that month, okay? If we jump into the right-hand side, the hourly candle, what we're looking at there is the fact that we've opened at the beginning of the hour at this price, okay, where we've got open of the hour. We then closed, okay, at the end of that hour, and we also have the highs and the lows of the hour as well. Okay, so it does depend on what time frame you're looking at, and therefore what data you're seeing in these Japanese candlesticks. Okay. Now, when it comes to these candlesticks, all it's really showing us is buying pressure. Okay, what's happening behind the scenes? Who are people buying? Are people selling? Are there a lot more buyers or are there a lot more sellers? Okay, so if we look on the left-hand side, we've got a bullish candle. And this is actually, these are called MARUBOZU candles, which we'll talk about later. So what we have here is bullish momentum, okay, upward movement, okay, and the bulls are clearly in control. Now, how do we tell that? By just looking at these two candles here. Now, first of all, both of the candles are green, okay, and green indicates an upward movement. Okay, so we are moving up in that market. We've got nothing but just pure green blocks, pure green rectangles of these Japanese candlesticks. There are no wicks, okay, there are no tails on either of these candles. So essentially what it means is the market has opened, climbed all the way up, and stopped and closed. And then the next candle has opened at exactly the same point, climbed all the way up, and then at the end of that session has also closed. Okay, there was no fight as such between the bulls and the bears, the buyers and the sellers. Okay, because there were no wicks. If there was wicks, it potentially meant that there was some sellers pulling these prices down. Okay, but here it's very plain sailing from the open to the close, just purely bullish movement throughout the entire session. Okay, so in terms of the right-hand side, it's completely opposite. Okay, we've got bearish momentum. We have a downward movement in the market. Okay, and then we have and we know this because we've got two red candles. Okay, two fully red-bodied candles. Okay, no tails, no wicks, and 2 sessions in a row we are heading down. Okay, and the bears are in control of this market. Now, if we look at the other aspect of these candles is actually how big these candles are, okay, how big they are. So first of all, we're looking at the fact that, let's start from the 2 large highlighted sections, okay, at the sort of top, middle and top right of this page. Now, these are larger than normal candles in comparison with every other candle we can see on this page. Okay, now what that indicates that during the times where there are larger candles, it means that there's a lot more activity and a lot more volatility during that period. Okay, so there's a lot more pressure in that market, whether that be buyers, whether that be sellers. Okay, and obviously these 2 ones here that I've highlighted are almost completely green candles. So as you can see, there is a lot of buying pressure compared to the previous candles before them. Okay, now vice versa, you can have these really small candles like the one I've highlighted on the bottom left. Okay, and this could just indicate times of low liquidity. Okay, not much movement happening in the market. Maybe during the time where the UK and the US is closed before the Asian market is opened. So you can see that the volatility is a lot less, and therefore there's a lot less liquidity in the markets and a lot less movement going on. Okay, so the size of the candles are also very important because they just show you how much pressure potentially that there is from buyers, from sellers, etc. in the market. Now, when we look at these candles, we have to, and this is why this page is actually called a deeper meaning. We really have to understand what is going on in this candle. So, first of all, if we look at this candle that we've got here on the left-hand side, automatically we know the candle is green and therefore the bulls have won. Okay, if the bears had won, there would be a red candle. Okay, so we know whatever period this was, whether it was a day, whether it was a month, whether it was an hour, we know that the bulls have won. Okay, now the second thing is the tails and the wicks are extremely long. Okay, really, really long. You've got a long bit at the top and a long bit at the bottom. Okay, now what this indicates is that there was a bit of a fight, to be honest, pushing the price both higher and lower during this period. So what we then do is we think deeper. Okay, so what actually happened between the buyers and sellers? So first of all, considering where the market opened, okay, and where the market closed, which is the body of the candle as we described earlier, it's quite a small range compared to the rest of the day. Okay, so what that indicates is that the buyers were unable to drive the price much higher. They only managed to drive the price a little bit higher. But at the same time, the sellers were also unable to drive the price much lower. They really tried. They pulled the market all the way down here to the bottom of the page and the bottom of that candle where we can see. Okay, but they failed because the bulls ended up coming back and pulling that market positive for the session. Okay, now, based on this candle itself, this doesn't really give us a strong bullish or a strong bearish bias at all. Okay, what we call these kind of candles are indecisive. Okay, neutral. And because it's green, we would say it's slightly bullish. Okay, but what you have to do is you have to think of it like a fight between the buyers and sellers. Okay, between the bulls and between the bear. Okay, and once you understand that, you will understand who's winning, and therefore perhaps what the next candle can potentially be, whether it should be bullish, whether it should be bearish. If you can understand that story behind the candle, okay, the price action, Okay, if you can understand that, then you will be able to make very, very strong analysis when it comes to predicting the next move. Okay. So again, just looking at this candle, I'm just putting it into perspective of an actual asset now. So let's say we opened as we've got here, where buyers took control at $10. Okay, so we started at $10, we've opened at $10, which indicates where is the bottom of the body of that candle. Okay, we've then moved up, okay, all the way to $15, so the buyers have taken control. But at this point, what's happened? The sellers have prevented that price from going any higher. Okay, they've got to 15, and now the sellers are taking control. Okay, they're driving that price down again, and they actually drive the price down all the way down to $5. Okay, but here the buyers are now getting involved. Okay, they're taking control again, and they've now driven the market up again, just above where they started, an extra dollar higher, 10% higher, and therefore finishing that session at $11. Okay, so this is the story behind the candle itself. So what's actually happening behind that candle? Okay, and it's really, really important to be aware of that. Just so that when you look at these candles, you're actually seeing it from the perspective of what are the buyers doing, what are the sellers doing, who is in control, who looks like they're moving this market, and where could this market be moving going forward. Okay, as I say, you might have to go through this this course, this video again, just to get the full understanding. Don't move on to the next section until you have got that real deep understanding of how these work. Okay. Now, so what have we learned so far, just to recap? Now, first of all, big-bodied green candles are bullish. It means the market's going up. Okay, the big-bodied red candles are bearish. The market's obviously going down. Okay, the spikes or the tails or the wicks, whatever you want to call them, indicates an indecision, okay, and fight between the bulls and the bears, the buyers and the sellers. Okay, so they're not quite sure who's winning the market. It's a big battle. Okay, now, obviously, if we have big candles, large candles compared to normal, it means there's a lot more activity or liquidity or volatility during this area, okay, during this session. And if we have small candles, it can indicate a lot less activity or very low liquidity or volatility in the period as well. Okay, so we're going to take it a little bit deeper now. Okay, now, the reason why they're so important, these candlesticks, is because they help us predict that next move in the market. Okay, if we know that there are more buyers or sellers at a specific point, then we can predict whether the next candle should be bullish or bearish, and therefore whether the market should go up or down. Okay, and it helps provide us with those high quality trade ideas. So what we then have to do is start putting these candlesticks together and understanding actually what candlestick patterns are and the meaning behind these candlestick patterns. Okay, so I mentioned this one earlier, which is the MARUBOZU. Okay, this is a continuation pattern. Now, technically, a continuation pattern, what that means is if we're already in a bullish market, if we're seeing these MARUBOZU candles, then potentially we're just going to be continuing to the upside. Okay, so on the left-hand side, I'm not going to run through this on both sides. I'll just run through the green, and obviously the opposite is going to be the red candle. But the story behind the green MARUBOZU that we have there, with the open price at the bottom, the closing price at the top, it technically means that there is not much competition, or if any competition, from the opposition. Okay, so in the case of the left candle, the bullish, there's not many sellers, there's not many bears entering the market at this point. The bulls are clearly winning. Okay, so what happened? Well, the market opened, it continuously rose all the way up. It then closed at the highest point of the day. Okay, so that means that the buying pressure is high. It means that the bulls are in control. It gives us a bullish signal, and it indicates that our next candle can potentially be bullish. Okay, and vice versa with the red one. Okay, with the bearish candle, it could mean the opposite, that the selling pressure is high, the bears are in control. It's a bearish signal, and therefore the next candle should be bearish. Okay, so quite a simple, easy to understand pattern, this one. Okay, so we've spoken about the MARUBOZU. Okay, the continuation pattern, quite an easy one to get to grips with. Okay, so we're gonna talk about the spikes or the shadow candles now. Okay, now mainly what these ones actually show us is the fact that we're starting to have some competition from the opposition. So we'll look at the left one first. Okay, so the green one, the green spike or the green shadow. So the story behind the candle. So first of all, the market has opened, okay, at the bottom of that green body, okay, and what's happened is the sellers have really tried to force that price down. Okay, they've brought that price all the way down to that bottom part there, Okay, and then what they've done is they've then buyers have managed to regain control, and they've managed to bring that price back. Okay, and they've actually brought the price higher than where they started the day. Okay, they reached a certain point at the top. There was a slight pullback, a few sellers entering the market, but we finished bullish for the day. Okay, and therefore we got the green candle, and therefore the confirmation that it was a bullish session. Okay, I keep saying day. Just understand when I say day, I just mean in terms of looking at a daily time frame. But what does this mean? Okay, what does this candle actually mean? So it actually means that there are actually a lot of sellers attacking the buyers here, but currently the buyers are still stronger. Okay, so therefore it gives us that bullish signal, and it's just something to be aware of, because it means that we need to keep watching this price action and seeing what's happening with these sellers, whether or not they're going to die off, or whether or not actually they're going to start overtaking the buyers and therefore bringing the market down. Okay, if we look at the right hand side, the market has opened. Buyers this time have tried to bring that price up. They've driven it all the way up to that top point, but then the sellers have managed to regain that control, bring the price back below that opening price, okay, and therefore closing again bearish and closing lower for the day, or for the session. Okay, so that means completely the opposite. It just means that there are a lot of buyers attacking the sellers here, but currently those sellers are still stronger in this market. Okay, so it's still a bearish signal, but again, we just have to be aware that there is a bit of competition. Okay, there is a bit of a fight occurring, and there are either sellers or buyers trying to attack in this session. Okay, so the next kind of candle we need to be aware of, and these candles show us indecision, okay, and an indecision could lead to a potential reversal, okay. Now, what I mean by indecision, it means that basically no one's taking full control, okay. There is a fight between the buyers and sellers, okay, and we know that, and we can see that because we've got those wicks, okay, we've got those tails, we've got those spikes, okay, but pretty much the market will open and close at a very similar point in that session, okay, and if its time frame is monthly, in that month it's open and closed at pretty much the same point, okay, or in that hour it's closed at pretty much the same point that it opened and closed at, okay. So this signifies a neutral bias on this candle, and therefore the next candle is hard to predict, okay, and it also could mean indecision as well. So therefore there are no winners, okay. There are no buyers, there are no clear buyers taking control of the market, and there are no clear sellers taking control of the market, okay. So these are the kind of signals that could indicate a potential reversal, okay. If we had a lot of bullish power, okay, loads of buyers entering the market, price rising, okay, and then followed by some periods of indecision, okay, it could indicate that actually the bulls are losing control, okay, they're losing that power, and therefore the bears are ready to begin to take over and turn that market round, okay. So this is a kind of potential scenario, and you will see this in the actual charts on the markets, okay. And if we saw this on the market where you have two big bodied green MARUBOZU candles, okay, followed by 3 dojis, could be 2 dojis, could even be 1 doji, okay, it indicates that buying pressure that brought the market from that bottom part to that top part there, okay, means that buying pressure is now dying off, and there's starting to be some sellers entering this market, okay. Buyers are still fighting, but it means that those sellers are kind of sitting at this point waiting to regain that power and actually bring that market back down. So these are the opportunities where we look for short trades, okay. Now, this is a perfect scenario of what could happen in these kind of areas. So you have that big bullish movement, you have that followed by the neutral or indecision candles, those dojis at the top, and then finally the sellers take over, and you have those big red candles pulling that market back down, okay. And this is certainly something that I've seen before, okay. Us at Trading Field, we have seen these kind of things before, and they're the things that you can actually put together and actually find some good trade ideas for this. And all it is just knowing who's in control, okay, and knowing if the bulls are in control, watching what's happening on these candles and actually seeing where these sellers are. And if you can understand, as I say, the deeper meaning behind these candles, then you can really see that change in bias. You can really see those bulls die out, and therefore the bears come back in, okay? So In terms of the dojis, okay, we have a few different kinds of dojis. Now, very similar to the ones that I just showed you. Now, the Dragonfly and the Gravestone doji. So, first of all, most importantly, we know two things, okay? We opened and closed roughly at the same point, and that there was also a huge fight between the bulls and the bears, okay? So, this means that this candle, like all candles, all doji candles, are showing us indecision, okay? But what we've got to think about is the location. So if we see the gravestone at the top of a trend, okay, if we see that gravestone doji at the top of a trend, it could mean that a potential reversal is coming, because obviously the buyers have tried to push that market higher and higher and higher, but the sellers have really come in and pulled that market back down. Okay, the sellers are applying that pressure, and vice versa. If we see a Dragonfly doji at the bottom of a trend, okay, again, the opposite. It indicates that the bulls could potentially be ready to take over and drive that market back up. Okay. Now, we also have these patterns which are called morning star and evening star. Okay, your morning star is where you have the star at the bottom. So just think about the early morning, okay, the sun rising, okay, and obviously the evening star, we've got the moon in the sky, for example. Okay, so as mentioned in the last slide, the position of the candles are really, really important. So if we have a bearish candle, okay, or a bearish trend, followed by a doji, okay, and then followed by a green candle, okay, then that potentially is proof and confirmation that those kind of bulls have now overtaken. Okay, the buyers are now back in the market. Okay, and that's kind of that proof that we look for as traders, to give us that signal that there's a change of direction and we're ready to trade that market, okay? And opposite to that, if we have a bullish candle or a bullish trend heading up, we then have a doji at the top, okay? And then we have when we have a bearish candle after that, this is the evening star pattern, okay? And this pattern gives us that potential confirmation that the sellers have taken control, and therefore that the market is going to flip over and reverse and start heading further down. Okay, so I hope this is all making sense. Just draw these all out on your own notepads. Obviously, put your notes there. Make sure you start again from the beginning of this section, so you understand what the close is, what the open price is, where they are, the tails, the wicks, what they actually mean. What's the highest point of the day? What's the lowest point of the day? Because these are extremely important, okay? And now we're just going into a bit more advanced to actually tell you the specifics of each candle and the patterns that they show us. Now, I've mentioned in the last slide confirmations, okay? And it is really, really important for us as traders. We want to have, or we want to put all of the odds in our favor, okay? As much as possible. So what we look for with Japanese candlesticks is what we call confirmations, okay? Confirmations that the bias has changed, that the buyers have entered or the sellers have entered the market, okay? So thinking about the last slide, we had that morning star pattern, okay? That final green candle after that red bearish downtrend, and then the doji, we then had that big green candle, and that indicates that after however many sessions, we've now got some bulls entering the market and therefore could see a turnover, okay? So we need to look for those confirmations because they prove that change of bias for us, and that ensures that we have a higher probability with these trades, okay? Because we've already proved that the buyers are back in the market. Don't try to see a doji and automatically believe that the market is going to reverse, okay? It doesn't always happen like that, and dojis can sometimes just be potential just slowdown whilst the market kind of regains and has a break before it carries on going further. Okay, we need that actual confirmation of the buyers or the bears to actually just indicate and confirm to us that the bias has changed. Okay, so it's very, very important we use these confirmations. Now, a few more patterns just to be aware of. We have the Harami pattern. Okay, Harami basically means pregnant in Japanese. So on the chart, it looks like one candle is within the body of the second candle. Okay, so it basically means that there is a potential change of direction. Again, we would still want to wait for the confirmation. Okay, but if we look at the left hand side, okay, the second candle has gapped. Okay, which means that the second candle has actually, where the market is closed on the previous session, is actually opened lower. Okay, and therefore the controllers, the bulls in this case, of the green candle and the previous candle, were unable to actually bring that price back to where it got to previously. So it means that there's some serious sellers that have entered the market. Now, just looking at this chart, just so that you're not confused by it, the reason we've got that big green candle and that's under the bearish section is because this is an indication of a potential bearish movement coming, okay, a reversal. And on the other side, we've got the big red one, and the reason why this is under the bullish section is simply because it's actually a bullish indicator that potentially that market is now going to be going higher, okay, because we've had that Harami pattern, we've had the sellers not keeping up with that same pressure from the previous candle, okay. So these are reversal patterns. Again, we like to look for the confirmations to ensure that it is going to happen, but just something to be aware of, the Harami pattern, okay. We then have the hammer pattern, okay. The hammer is the same concept as the previous Dragonfly Doji pattern. Now, if we see this at the bottom of a downtrend, okay, it means that we could be witnessing a reversal, okay. And just think about it again, the deeper meaning. Okay, the bears have really tried hard to push that price down, but the bulls have come back so strong and they've actually brought that market back up. Okay, so if it's at a significant point, like the support and resistance levels that we talk about in this course, or Fibonacci levels, or on the EMAs, it means that there's a lot of bulls or a lot of buying pressure that are actually at this region, and therefore will give us that potential indication of a change or a reversal in the current trend. Okay, so the next one is a hanging man. Okay, it's exactly the same. It looks exactly the same as the previous one, but the difference is it's actually at the top of an uptrend. Okay, and again, it can kind of indicate that we are having another potential change of direction. And again, just think about the meaning behind the candle. It potentially means that there are sellers really entering that market now. Okay, and if the sellers are entering that market at that price, it could only be a matter of time before they actually take control over the bulls, okay, and therefore pull that market lower. Okay. We then have the inverted hammer, or what we call the shooting star. Okay, and the inverted hammers at the top of a trend will give us that bearish signal as well, and again a potential reversal to occur. Why? Because if we look at this candle, we can see that obviously the bulls have really tried to push that market up, but the bears have completely attacked it all the way back down. Okay, so these again just reversal patterns just to be aware of. You don't even need to know the names of these patterns, but it's just a case of being aware of what they look like and what they actually mean when it comes to the buyers and the sellers in terms of the pressure. Now, this candle is probably one you'll see quite often, okay? And in terms of the actual meaning of it, it's called an engulfing candle, okay? A bullish engulfing pattern and a bearish engulfing pattern, because it completely swallows the previous candle. Okay, so if we have a red candle like we have on the left-hand side, and then we have a green candle which is so much bigger and swallowing it, okay, the actual rule is if the bullish candle on the right-hand side is more than halfway up the body of the previous candle, we still consider it a bullish engulfing pattern, okay? So that's just one thing to really keep in mind. It doesn't have to completely swallow the whole candle. It can be half or just slightly more than half, okay? And that still indicates that the bulls are actually taking control of that market, okay? And therefore, we should be seeing the market on the left-hand side, we should see the market go up, okay? And on the right-hand side, we should be seeing that market pull down because we've got so many more sellers entering the market, okay? So the bullish engulfing and the bearish engulfing, you'll see these a lot, okay? You'll see these a lot. Now, they are the main candlestick patterns. There are probably well over 100 candlestick patterns, but honestly, 90 of them are absolutely useless, okay? And you don't need to worry about them. You don't need to know them. The main thing about these candlesticks, okay, is just the fact that making yourself aware of what's actually going on behind the candles. So what's happening between the buyers and sellers? Who's taking control? Where's the fight? Okay, and the only way that you'll kind of get stronger and stronger at actually knowing what's happening with these candles is the fact that just practice, okay? Just keep looking at charts, seeing these reversals occur, and figuring out why. Figuring out if you can actually look at these candlesticks and say, well, actually, yeah, you can see that the sellers were here. They entered the market here, and therefore that market just kept going. Now, remember that, first of all, remember that they can occur on all time frames, okay? But the strongest ones you'll find will be the monthly, weekly, daily, and 4-hourly. Okay, you will find some on the hourly, and that's fine as well. But when you get into the, say, 15 minutes or even less than that, if you are going to be doing that, although we don't recommend it, okay, they're definitely nowhere near as accurate, because just think about it in terms of sample size, okay? That's 15 minutes worth of data compared to, let's say, a whole day's worth of data, okay, 24 hours worth of data. So just be aware that obviously the more data that's in there, whether it's monthly, weekly, daily, just ensure that those are the ones you really focus on, because they're going to be where the accurate trade entries will occur. Also remember the locations of the candlesticks, okay? It's just as important as the candlesticks themselves, whether or not they're at the top of the trend, whether or not they're at the bottom, okay? If they're in the middle, it's fine as long as they're a continuation pattern, okay? But it's also about lining it up with the other technicals that you will learn in the course, okay? So the other things that we will go through over the next few chapters in the advanced technical analysis section. It's all about putting these things together, but in all honesty, price action is the most important part of technical analysis and trading, okay? If you can read price action, okay, you can see what the sellers and what the buyers are doing at specific points, then you will be able to trade that market and you will be able to make money. The next thing I'm going to do is I'm just going to run you through my live DAX chart, okay, the German indices. And I've actually highlighted quite a few zones where I can just show you how these candlesticks actually play out, okay, and how you can really easily identify these kind of patterns, okay. You'll see a lot of the engulfing patterns, you'll see a lot of the spikes as well, but I just want to show you what they actually look like on a chart so that we can actually identify how they work and actually prove to you that they do work, okay, on these charts, and they do help us analyze the market, okay. So thanks for listening. I'll just jump into the DAX chart now, just to show you these candlestick patterns in action and how they do 100% tell us where that market is going to be moving next, okay. So I'm just going to run through them from left to right for you. So first of all, what can we see here? Okay, so we've got bullish, 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 and then here we've got that kind of pin sticking out the top, the big wick, the big tail, meaning that we're starting to see sellers coming into this market. So in fact, we were starting to see a few sellers coming into the market here, a few here, and then here now we're getting a lot more. Okay, so immediately after that, we have the sellers enter the market in a large fashion, okay, driving the market nearly 250 pips or so in one single day. So here we know that we're at a point where there are sellers in this market here, okay, so there are sellers in this market, and we need to start to think about shorting this market. So do the candlesticks tell us that? Well, of course they do. I just run through that with you. And what we can also see here now with this candle here is we've got a bearish engulfing candle, a huge bearish engulfing candle. So the market from then has sort of come back up, retested that previous level, okay, and we'll talk about this later in the breakout and retest section, in the advanced section of the course. But what it's done is then it's retested, okay, it's got to that level where we know there are sellers, okay, we know there are sellers there, we've just drawn that in, and then the market has fallen. Okay, so first of all, very obvious sign is the fact that we had sellers entering the market and a bearish engulfing pattern. Okay, here we also have an evening star pattern. Okay, we've got the green candle, we've got that followed by the kind of doji there in the middle, and then we have that red. So just confirming that the sellers are entering the market, shorting that market there, and heading down into 11,800 or so. Now we'll talk about targets and how you choose your targets and where you need to look for in terms of targets later on in the course. But yeah, just in terms of the actual candlesticks, you can see how this works. Again, here we've got a bullish engulfing candle, okay, and as I mentioned to you previously, as long as we're more than at least halfway on the previous candle, then we count it as a bullish engulfing. So it means here we had the sellers, okay, we had those sellers entering the market, and we have that bullish engulfing candle, so therefore we have then a bullish movement upwards, okay. We also have this candle right here, the hammer pattern that I mentioned to you, okay, and that has retested that previous region where we know there are buyers in the market,
and then obviously the market has sprung straight back up, and from there we had a nice, again, upward movement from 12,000 all the way to about 12,600, so 600 pips or so in the space of about 2 weeks. This one here, we obviously have a morning star pattern. So we have the red, we know the sellers are in the market. We then have a bit of uncertainty. We have that doji. Okay, we have a lot of sellers trying to drive the market lower, but the buyers are really entering the market here. So we know there's buyers at this point of the market. And therefore we're looking for that confirmation, and the next candle we get that green confirmation where the sellers are unable to push that price lower, and therefore we should be heading higher. And what do? Up we go to that next level. Okay, so again here, bullish, bearish engulfing, and then we have that downward movement. These are very easy to spot once you know what you're looking for. Okay, this one here, we have a lot of pins. Okay, so we have a lot of indecision in this point here. Okay, so what I would do in this scenario when I'm trading it is I'll just kind of block off the fact that we have that range. Okay, and we have the fact that the market is unable to close. Okay, the candle is unable to close outside of this box region that I've just drawn. Okay, and then obviously what we're looking for is looking to see whether the buyers are going to be stronger or the sellers are going to be stronger, and we have the wicks on both sides, but eventually the bulls managed to close that market just above that range and that region that I just put on. Okay, and what happens next? We move from 12,300 all the way up to 12,700, so another 400 pips or so in about a week and a half. This one here, we have the bullish harami pattern. So we've got that big red bearish candle, okay, and then we have that followed by a candle sitting inside the body of the previous candle, and it's a green one, meaning that there is a potential change in direction. What happens next? We then move from 12,570 to 12,870. So 300 pips in 1, 2, 3, 4 days. Okay, so hopefully you understand the importance of these candles, and that's why we wanted to talk about this in one of the first lessons, because we need to be able to read price action. If we can read price action and we can read where the buyers are and the sellers are in the market, we can predict the next move, and that's how we as traders make money. Okay, that's how we profit in this market. Here we have another bullish harami. Okay, so potential change of direction, and what do we see? Okay, we see that retest down here. Market, the sellers try to pull that market down but fail. The bulls are in control, and therefore we can look at a bullish move, and we have that bullish move right there. Okay, we then have the this one here, another bearish engulfing candle. Okay, big bearish engulfing candle. We have the market the bulls try to sort of bring that market up but failing, so we then see obviously a nice drop, and in fact a very big drop in the price here in the market. So these are very, very important, these candlesticks, okay, and you just need to understand what the patterns actually mean, how we find them, where they are is also important. As I mentioned, we need the hammers and things at the bottom of a potential trend, and that will obviously ensure that the accuracy of those signals are very, very strong. And we can look at these on multiple different time frames as well. So obviously if we look here, we've got a bearish engulfing. What happened? We came back and retested, but we actually fell quite a lot from 13,100 all the way down to 11,800. These are weekly candles now, so this is weekly time frame. So a huge movement there just based on this one. Okay, based on this candle, we can see that that was going to occur. Here we have that hammer pattern again. Okay, we have that hammer pattern here, and then followed by our confirmation. We always like to have confirmation on these markets that we're trading, so that we kind of verify our decision. And again, we have a nice big bullish movement up here after we have that hammer pattern and the engulfing bullish confirmation candle right here. So as I said, works on all time frames. Obviously it's less accurate when you're looking at, say, the 15-minute time frames. Hourly and 4 hourly candles are okay. I probably would prefer to look at 4 hourly candles. Okay, and you should be able to see those patterns quite simply on here, and it's just again remembering and thinking about where we know the sellers are in the market. So obviously we know there's a large amount of sellers here because we've had that big wick. Okay, the second time we've gone to try to attempt to close that market higher, the sellers are very clearly in control. Okay, the buyers have tried to push it up, but the sellers have taken it down for two sessions in a row. And then what happens? Obviously, we then decide that the sellers are stronger than the buyers, and we have a big movement downwards of about 500 pips or so. So these are the things that we need to look for, and I just wanted to put this at the end of the video just so you can see how it works in practice. Bullish engulfing patterns we'll see quite a lot. We'll see these kind of hammers and inverted hammers quite a lot as well, indicating that change of direction should be occurring, should be happening. And we also get these things, what I also like to call 3-pin pattern, and that's this one here, where we basically have one pin here. Okay, we have that second pin higher. Okay, and the third one then we have lower, giving us that kind of, if we were to look at it in a smaller time frame, what we're actually going to see is we're going to see that sort of zigzaggy head and shoulders type pattern, which we actually go to talk about in the next section. Okay, so in this sort of 3-pin pattern that you'll see, if we drill down on a lower time frame, what you'll end up actually noticing and what you'll end up seeing will be a pattern similar to this one here, which is a very strong reversal pattern as well. We'll talk about that in the next section, so I won't go into too much detail onto it now, but I hope that makes sense. I hope you can actually visualize this yourself, and it just takes a bit of practice identifying this, and it's also about matching up the time frame. So for example, on the 4-hourly time frame for Germany, okay, we look bearish, okay, because we've got that 3-pin pattern. So we can potentially be heading south on this market. We can be potentially heading down here. Okay, so we then have to sort of jump onto the other time frames and just see if it confirms our decision. So we know that there's a lot of sellers entering the market. Okay, we know that by this big pin pattern here. Okay, so we know that. We also know where we are previously. We've had a lot of sort of rejections at this region here, which I'll talk about later on in the course. And then if we look on the weekly one, for example, as well, we just need to sort of match these time frames up and just see if our bias holds out and stands up in multiple different time frames to just confirm that our analysis is going to be correct, and therefore we're going to be placing a profitable trade. So I'll see you in the next chapter, and I believe the next chapter will be covering price structure.